Welcome to The Explainer. Today we are diving into a really big question, one that could seriously reshape the financial future for millions of American kids.
I mean, just think about that for a second. What if, from the day they're born, every single child in America got a piece of the economic pie? Like a little financial seed, planted and just waiting to grow.
Well, guess what? This isn't just some what-if scenario anymore. A brand new government program is actually making this happen, and it's kickstarting a nest egg with this exact amount.
So today we're going to unpack this whole new initiative. It's designed to do just that, and you've probably heard them called Trump accounts. So let's break down exactly what they are.
Okay, so first things first, what is a Trump account, really?
Basically, you can think of it like a retirement account for kids, getting a super early start. Officially, it's what's called a custodial account, which is just a fancy way of saying a parent or a guardian is in charge of the money until the kid legally becomes an adult at 18.
All right, so how does this whole thing actually work for a family? What are the nuts and bolts?
So the big headline here, the thing everyone's talking about, is that one-time $1,000 contribution from the U.S. Treasury. But, and this is super important, it's a pilot program. That means it's only for kids born in a pretty specific 4-year window, between January 1st, 2025 and December 31st, 2028.
They really tried to make signing up easy. All you have to do as a parent or guardian is basically make a choice by filing a new IRS form when you do your taxes. That's it. After you do that, the Treasury will get in touch and give you instructions on how to get the account up and running.
Now, check out this timeline. They picked a really symbolic launch date. The accounts are actually set to go live on July 4th, 2026. And yep, that's no coincidence. It's a very deliberate choice to mark the 250th birthday of the United States.
So you might be wondering, okay, that's great for newborns, but what about all the kids born before 2025? Well, that's where some major private money comes into play. We're talking a massive $6.25 billion donation from Michael and Susan Dell. It's going to provide a $250 starter deposit for up to 25 million older kids. I mean, that just dramatically expands who gets to be a part of this right from the start.
Okay, so let's say you've got the account set up. The money's in there. The big question is, where does it actually go? How is it invested?
The whole strategy here is built to be super simple. They're not trying to get fancy. The money is automatically put into what's called a low-cost index fund. Really, it's just a way to invest in the entire U.S. economy all at once. The whole idea is just to make a long-term bet on American growth.
And look, this isn't the Wild West of investing. You can't just go and buy anything. They've put up some really strict guardrails. I mean, you can see all the things you can't do. No picking individual stocks, no bonds, no crypto, none of that. It's all designed to be passive and cheap. The entire philosophy is set it and forget it and let that slow, steady, long-term compounding do its magic.
And wow, this chart right here really drives home the power of that long-term approach. Just look at that first bar. If you take that initial $1,000 and never add another penny, it could grow to around $15,000 by retirement age, based on historical averages. But then look what happens if a family is able to chip in more over the years. I mean, those projections start to look truly life-changing.
So what happens when the kid turns 18? Well, that's when the training wheels come off. The account basically converts into a standard, traditional IRA. That means the new young adult gets full control. They can diversify, invest in things beyond that initial index fund. But it also means they become subject to all the normal tax rules for retirement withdrawals.
All right, so now that we know how it works, let's kind of zoom out a bit. Who's behind this whole thing? What's the political and philanthropic backstory here?
You know, even the name of the program tells a bit of a political story. It didn't start out as Trump accounts. The original idea was called Invest America accounts. Then, in committee, the name shifted to MAGA accounts, and the final version that stuck in the bill was, well, Trump accounts. So, what was the thinking behind this? Well, according to the program's architect, Senator Ted Cruz, the motivation was ideological. He said the goal was to help create new capitalists by connecting a new generation directly to the stock market, giving them a personal stake in how it all works.
And if you follow the money, you'll see it's a real mix. It's a public-private partnership. You've got the U.S. Treasury footing the bill for the pilot program, estimated to cost taxpayers around $15 billion. But then it's been supercharged by that massive donation from the Dell family, along with other corporate pledges.
Okay, so let's get practical. If your family's eligible for this, what's the smart move? Well, financial experts seem to agree on the first step, but after that, that's where opinions start to split.
On one hand, you have experts like Adam Michael from the Cato Institute who are pretty cautious. He basically says, look, taking the free money from the government or donors, that's a no-brainer. Of course you do that. But he argues that if parents want to contribute their own money, other accounts like 529 plans might offer better tax advantages.
But then you have others, like Madeline Brown at the Urban Institute, who focus on the core benefit. For them, it's all about that initial grant. They emphasize that the gift is the most important part of this whole thing. It is, quote, really free money. And that's just a huge, undeniable win for every single family that's eligible.
And this table does a great job of clarifying that key trade-off. Just look at the tax on withdrawal row. With a Trump account, your money grows tax-deferred, but you'll pay income tax when you take it out. With a 529 plan, withdrawals are totally tax-free, but only if you use the money for education. So the Trump account is less flexible on investments early on, but way more flexible on how you can actually use the money once you're an adult.
So at the end of the day, what we're looking at is a massive new experiment in building wealth from the ground up. And it leaves us with this one big question. Will this program create a whole new generation of savvy investors, or will it just introduce a bunch of new financial headaches for families to figure out? That's what we'll all be watching.